Hi, welcome to the Market Alert for Tuesday, the 1st of April 2025. So oil and gold soar as US stocks suffer worst quarter versus rest of the world in 23 years. So that's a reasonable record achieved there. Gold's best start to a year since 1986 as stagflation fears soar. And US stocks finished mixed but rebound off worse levels after strong Chicago PMI data. Price action choppy as Liberation Day looms, and markets chop on quarter end ahead of Liberation Day. Economic news for today. Well, today we've got core CPI year on year from the Eurozone, and also from the Eurozone we have our favourite ECB banker, President Lagarde is speaking, and then we've got final manufacturing PMI, ISM jobs opening, the first of the job numbers this week, and ISM manufacturing prices. So let's have a look at the carnage from yesterday, and it certainly was volatile, and that's a bit of an understatement. So let's kick off and have a look at the Dow. So as we can see here, the market down, and then managing to pull back to the upside there. So maybe we've had the shakeout, because if we have a look here, we're going from there to there and down to 78% where the market stopped, and now reversing to the upside there. So we want some targets on the upside. Well, it's going to be this first pink line here down to the low, and there's some upside targets. So let's remove the lower ones as we've achieved the objective there of going down to 78%. And again, you can see that we've got to get back above that 200 MA in order to move higher, and also the pink line there. In the 30-minute chart, well, it was all fairly quiet for the Dow there, and then the market took off in the afternoon. As you can see there, lots of buying, moving prices until the close of trade, where we had a lot of volume coming in, but overnight prices are above the DP and trying to get back above the close and then towards the high and the 200 MA in the 30-minute chart from yesterday. You could also draw in some fib retracements there as well to give you a few pointers along the way. And in the German DAX, similar thing there. We actually broke the lows to the left there yesterday, but only briefly before the market turned around and moved higher, and overnight prices have become a lot more stable as well. We can try the 30-minute chart. So you'll see we had a bit of a shakeout there. Market dropping 100, 200 and 300 down to where I mentioned yesterday, the S3, where 99% of the time the market will find support and move back to the upside. And then you can see the rising lows there as the market made its way up. Got the DP there as well, which the market found support, so it's got to just try and move to the upside there. And there's yesterday's high, which at the moment is 100, 200 points, which is no problem at all at the moment given the volatility in this market. Meanwhile, in the S&P, we managed to create a double bottom there, the market trading down, and you can see the buying coming in to this level, and then prices overnight are sideways to higher as well. So once again, if the volatility is over, you can have a look at some of these on the upside just to see how much momentum and energy the market's got in actually trying to move back to the upside. In the 30-minute chart, same as the Dow, which you'd expect, cash market opened and sent the market to the upside. Whether this was the plunge protection team or there was some sort of Fed intervention, who knows. But the market moving back to the upside, it's got to take out yesterday's high there, which is sitting around the 5628 level. Meanwhile, in the UK, we came back to 78% retracement. We've got a spike in the volume there as well. We came off the lows with the market closing in the top quarter of yesterday's trading range, and overnight prices are sideways to higher. Again, we can choose our increments here for the upside. We've got all of these red lines, but to be honest with you, I would just go with the furthest out one and down to there, and use those as levels to move up. And you'll also see that 89% is the top of here and 78% is here. So given that is the case, they're very important levels, not just from a resistance level, but also from a Fibonacci level there and perspective. In the 30-minute chart, again, just like the DAX, we sold off, and then we came back with the US markets very strongly. We're above the close. We've got the high just above here, and also the 200 MA. And in the US dollar yesterday, very choppy session with the introduction of the tariffs, which I think take effect today or tomorrow. I think it's today. But overnight, a bit more weakness there in the dollar. Fascinating session yesterday in the metals, just as I spoke of. So let's have a look at those. And in silver, well, what a surprise. They slammed it yesterday. All of this talk and whatever about silver squeeze. There may be a silver squeeze, but it's not going to happen how they've been talking all over YouTube and over the internet. And that came as no surprise to me that yesterday the market was absolutely slammed. As you can see there, we dropped down a full dollar more or less. But then the market soon recovered, and this is where it's getting fascinating now, because the market was able to pull back and actually close above the 200 MA in the 30-minute chart, and more importantly above the psychological level of $34 per ounce. Meanwhile, gold continues to make new all-time highs, and we've got one at the moment. There is absolutely no stopping this at the moment. 3147. It will stop and have a correction. But there you can see, even just trying to tamp down the price, as what's his name used to say, not Austin Bennett, it doesn't matter, but he was part of the CTFC and said that the tools to tamp down prices, and they did that with silver yesterday. So moving back there, and up on the Asian market as well. So things are starting to fall apart for the US with these tariffs. And the market's not liking what it's seeing at the moment. So there seems to be a push towards some sort of safety, and gold is the safe haven for this. So yeah, gold moving higher. Let's have a look at the gold-silver ratio, and this is where it gets really fascinating. So in the gold-silver ratio, as I mentioned yesterday, they were trying to get it back to 92. We're coming back to these highs now, where we're seeing the market test them. They're going to go through. I'm going to tell you that now. As we look at the resistance to the left there, we are going to go through, and we're going to continue higher as well. Now, the suppression of the metals prices is very difficult. As seen yesterday, they dropped the market $1, the market came back. So what do? You have to keep trying to keep the lid on the pressure cooker, as it were. But you can see from this, it's going to blast through this area and head up to areas that we've not seen for a very long time, going back to 2023, which is about 93 there. So yeah, it's not looking good. Now, the interesting thing here, like I say, it's creating a pressure cooker. It's only because gold's moving up that the gold-silver ratio, but the problem is, by moving the gold ratio up, it's actually going to reverse on them. And when silver breaks, as we saw in 2023, let me just change this to a weekly chart and just do that. 2020, when we had the COVID thing, we saw this move up, but when they sold off, or the silver was allowed to move up from $13, you can see the impact, and you can see this in other times as well, where the market's got to these highs. And now we're in an area where that could possibly happen. But we've got up to 95, between 95 and 96 on the gold-silver ratio there, to move the market back to the downside as far as the gold-silver ratio is concerned, and then move the price back down. So this is a new situation. And like I say, the price of gold is what's allowing the gold-silver ratio to move higher, not the price of silver, because obviously it's being held, and that's why it's moving higher. But fascinating nonetheless. And yeah, I mean, it'll be allowed to move at some point, but not just yet. Okay, let's have a quick look at yesterday's trading session. So during yesterday, very choppy, very, very choppy. Even before, market up, market down, and these are 100-point ranges. So again, you'll see when the cash market opened, we moved down. We then became really, really choppy. Market back up to where we saw the selling come in the pre-market, in the futures, and then sideways again. We had the one signal there. It was the only profit of the day, if I recall. Sorry, two profits in the morning. It was the afternoon when we had consecutive losses. So choppy, but not great profits. Then the market decided, after the morning session closed, to trade all the way down to the S3. And then prices just hovering around that level. And then, of course, the cash markets opened in the afternoon in the US and moved higher. This is a black dot. That's because the stop was taken out before the market moved lower, which was a bit of a pain, particularly as it was a nice move. And then we saw the market move back, and it was that volatile we didn't get a buy signal because of the range of this bar. So then when we did get signals, as you'll see there, the market moving down, we did get a few points there. But then when we got to the sideways move, the market switching from back to front. So 2 small losses there as well. Very, very choppy in the afternoon there. So yeah, and then prices continuing to move to the upside and holding above the S2 there. So yeah, shame, but the way that it was for yesterday. Hopefully today will be a bit calmer and trend a little bit more. Let's have a quick look at where we are on the overnights, and you can see there we've had some buying coming in, big spikes there, but we've also had some selling stopping the up move. But the market sideways there at the moment, and you'll see that we're not too far off the high. Just have to bring this down a bit more. Let me just do this. There we go. So not too far off the high there, and we've got support at the close and the DP at the moment. Right, so let's see what happens during today. I'm more interested in how this silver is going to hold at these levels, and also more importantly the gold silver ratio as we're going back to 2023 highs. Okay, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.